welcome to our weekend review. And just to give a quick check over to what we had looked at in the last video, we looked at Neo, ENS, and J&J, and we reviewed those plays. And the only one of those that I was planning on continuing into this week was Neo. So let's go ahead and see what happened with our play in Neo. So we are on the 1 hour here. Let me zoom in. And so for those of you who haven't seen the previous videos, what I do is at the beginning of at the end of the week, I review the plays that I was looking at or that I found interesting and decided to take either a play for real, or sometimes I just air trade them or paper trade them. So, okay, this was Friday. This was the end of trading day Friday, and on Friday we looked at Neo and the two possibilities. Let me just reference this trend line right here and this 1171 or 1133. So let me zoom out real quick to the daily, and because it's always important to get the macro view. Okay, I guess there's two schools of thought. Some people think, well, it's not important. I guess it's okay if you're going to day trade and scalp, and you are a whiz diamond hands trader at this. I am not. I admit it. I accept it. Probably the best thing that can happen to you is that you realize what sort of trader you are. So I realize I know what I am and I know what I am not. And so I always look at the macro trend. So it's been on a downtrend, like we usually say. That's completely undisputable. And on the weekly and on the daily, so it did try to make a little base here. I think, let me take a better look at that. I believe at some point I thought this was going to be a double bottom. It didn't. It was just a lower low. Okay, and then it tried to make a run for it up here, but macro trends basically melted it from here on in. It didn't get very far. It didn't bounce as well as other market tickers did. So and that trend line that we were looking at, okay, and let me see, the 1133 is all the way up here. Okay, so that's just a support from back in March, April. Okay, that 1133 is this one right here. Sorry, that's the 23 one. Whoops, I knew that didn't make sense. Okay, so we're at 1133. We're all the way down here. Okay, so that, but those are old supports. If you take a look at all three of those yellow lines, which I will zoom into, I promise, they are all very, very old support. We can actually go ahead and bring this in. It's these lines right here. So they're all the way from 2020, July 2020. Those are those three lines that are right here. One of them is at 1170. The other one is right there, 1130 something, and the other one is somewhere there at 1091. Okay, so let's go back to and zoom into where we were. We are pretty much at the top, actually, which is kind of scary, at the top of this channel. Okay, and I had drawn a new trend line here. This is not a properly drawn channel. Let me actually go ahead and fix that, because I don't remember why I drew it that way. We'll leave it in until after the review, and then I'll fix it, just because I want to keep reference to what it is that we have. Okay, so this is the daily, and we are coming off of the top of that downtrending channel. Okay, so we basically just bounced off the top. It tried to break out of it. It managed to break out of this smaller channel, okay, from here to here. It did break out, and it kind of used this as dynamic support for a while. and it broke above the bigger channel here, but then immediately just dropped back in. So we're back into this, this we're actually back into the smaller channel. Okay, we can see it right there. Okay, so let's go ahead now and zoom in to our play. The way we looked at it on Friday was basically, okay, this is the outer trend line of the bigger channel, and this is the inner. It's not actually a thing. An inner trend line and an outer trend line is not a thing. It's just, okay, this is the original one, I believe, and then this is the new one that I drew, which was smaller. And it actually broke down into it, and it tried to break back out of it. It couldn't. You can see right here, it actually wicked down and then just came straight back down. These are those three very old important levels: 11.7, 11.3, and 10 something, or 11. Okay, and the other older support below is this 10.16 and the 8.01, which thankfully hasn't been reached. I really am expecting this to turn around at some point. Of course, we have a lot of Chinese ticker bad news, if you will. Okay, so let's drop into the 1 hour, see if we can look at our trade plan, which again, like I was saying, we do both sides. Okay, this was the end Friday right here, and we were looking at a possible up play towards the top of this channel, and basically not because of ticker news, but more because of the fact that the market started to maybe just perhaps bounce, and there was talk about the economy not being as bad as expected, and of course some earnings started to come out and things were not as bad. I believe it was the banks. So we thought, okay, we might as well cover the upside play, and this was the upside play. If it broke the nearest support, the nearest resistance which was 1133, then we would let it run, or that we would take a play to 1170, and that was basically the upside play. Obviously, that didn't work. After even pre-market, it was way down here, and then it just basically melted. This was the biggest candle, and yes, that is also pre-market. This is the actual first candle of trading hours right here. So it actually did go quite a bit low. It almost hit that 801 level that we have, and then it immediately bounced back up and recovered over that Monday, that Tuesday, then Wednesday, just kind of, and then Thursday it started, this momentum, this positive momentum, which was basically ER right here. This is basically ER earnings season right here, and then it realized that also there was some specific news to China with the Xi Jinping taking over the next term, and the way he did it is what kind of scares markets and the tickers that are from those markets, because it seems that he has been consolidating his power in such a way that's going to basically let him do whatever he wants. And he is very nationalist, and he is, pretty much not as friendly to the U.S. because he doesn't need to be, or he doesn't think he needs to be. And so this basically means that he's not going to be open to any, capitalist ideas that he doesn't feel comfortable with. And that means that basically this is not very good news for a lot of Chinese tickers. And so you can see, and of course there was some, even though there was some good news on the Chinese GDP, as I recall, which wasn't as bad as expected. Unfortunately, it was delayed, and that kind of threw some uncertainty onto the table. But basically, it recovered some degree of what it lost down on this first pre-market hour, hour before Monday open, and then and now it's seems to have sort of bounced off of this 947 level, which is not 946, which is not that strong, but here it is. Okay, and I would basically, I'm not going to play that next week, but this is what our play was for to the downside. Obviously, it was a play that when something like this happens, and it happens quite often, it gaps up above or down below your entry point, then obviously if it gaps to the downside, then this is completely invalidated. That's not going to happen anymore. But in this case, this one is also invalidated because you basically don't know, if this is just going to keep melting or whatever. So our play was to enter if it broke support at 11. It obviously did. So that play didn't or wouldn't come back into play until Wednesday. Okay, and Wednesday it did come into play. We did try to cross above, and you can see these three very strong wicks during trading hours. There was a huge undecisive wick to both sides pre-market, but during market hours we have these three wicks of price action trying to break above this 1097 level, which was our downside entry level. It didn't successfully make it over, and basically that was what I would have done. I didn't take this trade. What I would have done is taken it possibly at this candle right here, and then confirmed probably by adding another contract right here. And obviously it would have worked out quite well. As you can see, it just basically just blows through all of these shorter term levels or local levels, and then it went past our target price, and now we're basically at this point. Okay, so that would have been a very good trade should we have taken it. What would be, I'm not going to play Neo next week, but if I did, I would probably want to wait. We could enter if it breaks this resistance, which is the strongest resistance above of where we are right now. But in my opinion, that would be risky. The target would actually be all the way up to here then, okay, which is a nice risk reward at 230 basically. But okay, wait, sorry, I didn't set my stop loss. I would probably set that. I think this would be, yeah, that wouldn't be very good. But like I said, I'm not really planning on taking this play. If I did, I would more likely take, again, the downside play, and it would go all the way down to that 801. I honestly believe that that's going to be our next level, and that is also going to be where it finally fills in this gap, I believe. From when, I don't know. Let me go take a look. Actually, let's go out to the weekly. Okay. Okay, so that's from, apparently that's from somewhere in July of 2020. Oh my goodness, let me go back. Let me see here. Okay, there we go. Yep, there it is. So after filling that gap, I believe we have a better chance of bouncing than when we are right now. So if we go back to the 1 hour, this is what our trade plan would look like to the downside. Okay, and if it breaks this level, actually now we have a new swing which is down here, and it's a local one, but this one is stronger, but this one is safer. So obviously if it breaks the stronger one, then we're pretty much in the clear. If you want to be even safer, then if it breaks the local one, then that's a much safer entry. So we're going to go ahead and move that to be our entry. Okay, and the stop loss would, I'm going to go ahead and use this fib, which is right on that, on the SMA, and that would be our target to the downside. So this is the more likely play for Neo, the one that I would take. But again, our levels were pretty good, and our trade plan worked pretty good. Again, I repeat, and I want to be clear. I want to be clear about this. I didn't take it. I didn't take it for just because I was busy looking at other stuff at work. But that is basically what the play would have been, and it would have been quite profitable. So we're going to go ahead and still play one more to the downside. And to be honest, the upside play, I would not use that support level. I would probably want to make sure that it takes out this high. So I would, if I did take the upside, it would be that play right there. Okay, just to be on the safe side. So we're going to go ahead and look at these next week when we review NEO. Okay, so that was NEO. Now I did post a few other tickers on the Discord, so I'm going to go ahead and jump into those real quick. One of them was Bank of America, which I believe I was quite bullish on, and there is the play. Let's dig in deeper here. Okay, so our levels, okay, looking pretty good. It broke above this trend line, and our entry was 35.31. And if we would have taken this play, it would have worked out quite well. Okay, this was actually on Wednesday. Monday was back here. So when we analyzed this play, we were down at 34.98. And our nearest support, our nearest resistance, I keep messing up. Our nearest resistance was 35.31, and we said, or we planned, that if we broke that, then we would take the play to the upside. We did. We took it on Wednesday. It did right there. Okay, it breaks up above on Tuesday, and then it bounces and confirms or back tests that support, and then jumps off from there. So confirmation would have been either here, of course this was pre-market, so that's no good, or there, which is also pre-market, so that's no good. So probably right from the beginning, and to be honest, I might have, because it gapped up, then according to my trade plan that would have worked. But to be honest, I probably would have waited for it when it came back down, and I actually probably would have taken the play right here, even though it then dipped below, well, not dipped below, the entry is down here, but even though it did drop here a little bit, but I probably would have taken it on a more confirmed bounce. Might have even been this one, okay? But it did run up quite nicely, and it wicked off of this local level that we have here at 36.28, and actually that is where it stopped on Friday. So the Bank of America play, bullish play, would have been a good one. The Oxy was also bullish, and oops, let me zoom out of that. Okay, and this is what we were looking at in Oxy. There's a properly drawn channel with its center line right there, and let me see. We're basically looking for this to run up to the top of the channel, and we still have some room to run. So let me see on the 1 hour. This is what it looked like. Whoops, wrong way. Always gets me. Okay, might have overdone it. Okay, so that play is actually still in play, if you will. Although we did have we did hit resistance right here, and that's fine. It obviously. Right, I'm not zoomed in properly here. I knew something was off. It's the 1 hour, but I'm zoomed out. There we go. Okay, it's just because this. Let me bring this in closer. Yep, there we go. Much better. Okay. Okay, so here's Friday. Okay, excuse me. I still need to zoom in here so I can get the actual daily. There we go. Okay, so here is Friday, which is when we analyzed the play, and we decided that we were going to take it. And again, we were bullish on Oxy just because it's it's an energy play, and it actually also worked out quite nicely. From our entry at 68.31, it ran up. Sorry, here we go. This would have been Monday. So basically, it opened. We were already above our entry point, and it ran all the way up past our what could have been our first target at 73.20, and it seems to, although we were aiming for the top of this channel, it seems to have hit the support, which is it's a 1 year, at least a 1 year support here, which is what the 1 pixel line means in my trade plans. Okay, it seems to have hit that resistance, but as you can see, it might still work. It might still climb next week. This might actually be one of the better plays for next week if I just adjust it here. So what we're looking at is it is very likely to bounce around this level right here, which is also the POC line down there. And if it does break above that 73.20, then it will very likely run up and probably hit somewhere around this swing, which is also seems to be the top of a fib right there. And then we could leave a runner to go all the way up to the top of the channel. So I'm actually going to adjust that because I like that. I like that play. Economy doesn't seem to be doing that bad, and let me see here. Okay, so basically what we're going to do is move this up, and that'll be our new entry point. Actually, let me see. Yeah, and that will be. Yeah, we could probably move it lower. No, I like that because that's a 1 pixel line. I like that. I like that better than this local one right here. So let me just get this out of the way and bring this down. That would be the runner price target, okay? But the price target that I'm going to use for this play is going to be right here. And so that's let me adjust it to the stop loss. I'm going to use that local level right there. So that's a 195 play. Okay, so I like that. I like those odds. I would definitely play that to the upside. I would wait, to be honest. I would wait a little longer to play it to the downside. And this is why. The whole reason why we've talked about why we draw levels is because anywhere in between the levels we don't want to take plays, okay? Because the upside or the downside is not as large, and so what we would want to do is wait until we're close to a level, and a level can either be completely horizontal like this one, or it could be dynamic, trending. So in this case, this is actually the middle of the channel. There is a possibility that it will definitely hit some more resistance around this 73.22 level or 73.20 level. If it does break above it, then I would want it to go higher. That would be my first level at 77, and then I would look for more levels, but there probably aren't that many. And then 83 or something, I would use a fib extension tool to look at a price level for a runner. But to the downside, we have this dynamic support down here. We have the SMA, and we have a few locals as well. So even though we're at the middle pretty much of this channel, I'm still more bullish on oil than anything else. So I would expect this to have a greater probability to run to the upside than to run to the downside. So I honestly would not, I probably would not take the downside play. If I did, oof, no, I'm not even gonna. It would definitely have to break the SMA and by that time, then the SMA would probably be somewhere around here, and then what you have to the downside is a lot less than what you have to the upside. So that's probably why I would not play Oxy to the downside. So Oxy is going to be to the upside, and I'm going to star that one here because I like that for next week. Okay, we did do the back one, Bank of America one. Let me see. The other one we looked at was the Pfizer. Pfizer has earnings next week, and this was our upside play. You know, not a lot more to say than that. I mean, it broke through here on right on Monday, as you can see. Zoom in. Okay, so right from the get-go on Monday, it broke above the SMA. It broke into our, well, it didn't stay at our entry level, but it did break above it. So as soon as, oh, sorry, that's Monday. This is Friday. Okay, sorry. So on Monday, it did break through, and this definitely would have been a very good play, although up until Friday. So actually, you know what? That probably would not have been a good play, and here's the reason. You basically burnt your theta or your premium from Monday, Tuesday, Wednesday, Thursday, okay? And if we were probably taken to look, I don't know, 47, 47 and a half, or maybe even 47. 47 probably would have been like the best call strike to take. It didn't reach 47 during the first 4 days of the complete 5-day week. And it only did so and broke above it and almost reached the price target on the last day. So it probably would have burnt most of the premium, and you wouldn't have seen your call contracts go up in value that much. That would be an interesting play if we wanted to look at theta burn. I'll see if I can set that up and look for the value of the 47 maybe contracts. You know, 47 is up here, so it definitely didn't reach Monday. It didn't reach Tuesday. It touched it on Wednesday, and then it just dropped on Thursday. But as this is going up, okay, and you're not reaching and blowing past your 47, that's not 47. 47 is all the way up here. So it probably would have been 46 and a half, because I believe Pfizer has the 50-cent strike intervals. Every day you don't reach your strike, which is Monday, Tuesday, Wednesday, Thursday, then your contracts are losing a lot more value because of theta. The closer you get to expiry date, then the more value your contract loses. So even though you did blow past the 46 and a half, which would have been down here somewhere, okay, even though you did blow past 46 and a half, you only really did it until Friday. And by then, you'd have Monday, Tuesday, Wednesday, Thursday, and half a Friday probably against you. So this would not have been a good play. It did run into the green, but it took too long. Okay, so I'll try to get a video on theta burn, and I'll try to use that example so that you guys could see, because that's definitely something to take into account when you're trading options contracts. Okay, so rig was the other one. That one would not have worked out very good. Not only did we not reach our first price target, which was 391, but again, pretty much the same. We barely only reached it on Thursday, and then on Thursday it just plummeted. Well, plummeted, you know, it dropped and further from our price target, and not to mention Friday. So by Thursday and Friday, the little value that was still left in the contracts, because we hadn't blown past our strike, would have died Thursday and Friday with that drop. So rig would not have been a very good play. But I do want to point out we had this note here, entry on point of control line, POC line, instead of the swing high. Okay, so this was our swing high, and this was our POC. And what we were testing here was the following. Is it better to use a POC line as an entry or as a level, okay, as a support resistance level, or is the swing stronger? Okay, the swing level stronger than the POC level. Okay, so in this case, because we decided to use the POC line instead of the swing, then we increased our target. So originally, our play would have been enter at the POC line, and then try to run up to the swing. So what we did was, what we decided to do was, no, we'll actually we'll move the target all the way up to here, and then we should use. So what we were saying was, do we want to use this play where we enter at the POC, or should we use sorry about that, or should we use something like this? And then it didn't make, obviously we would have to move our stop loss probably exactly to our POC. Then it wouldn't make sense because, obviously the return was a lot less than the reward. Sorry, the return was a lot less than the risk. So that is why we didn't take this play, and I think it kind of helped to point out, well, we could still let it play and see what happens, but obviously the POC line does seem to be proving quite strong. There was some bounce. It did serve as support on Monday and Tuesday, and it seems to have served as support also on Friday, right there. So in this case, I guess we didn't get a clear answer to that. So let's move on to SACH, which was our next ticker. SACH chemical. That one did not work out. We didn't reach our stop loss. We didn't reach our price target. And let me go ahead and see how this would have played out. This is Monday's right here. Okay, so this would have been the entry. It does, let me zoom in, because it does seem like we would have taken it. Let me see. So this is Friday. This is Monday right here. It did climb up above the entry, but barely closed. Then on Tuesday, it did close. And then on Wednesday and Thursday, it just kind of, dropped. So we basically would have had to get out because it wasn't going to reach, and we probably would have gotten out somewhere here on Wednesday because we knew that by then we were so far away from our target that Thursday and Friday, I mean, it would have to be crazy to just basically blow through that that target price, which is right here based on this level that for some reason is not marked. I need to mark that. Okay. That's on a daily. Okay, so the SACH chemical did not work. And let's look at SMR. There's a lot of talk about nuclear this week, but no, we were expecting it to go up towards the top of this trend line. It did not get anywhere close. It did break through on Monday, broke above, but then just started melting back down, and eventually, we would have gotten out of this trade because it broke through our stop loss level. So that one did not work. I'm actually going to try to put X's on these, the ones that didn't work. Okay, and let's look at XLF. Okay, and there it is. And XLF would have still been in play, and we probably would have made some money. The entry would have been here probably on Tuesday. Sorry, on Tuesday right there. And even though it did drop Wednesday and Thursday, it dropped from a gap up because it gapped up from this opening to this. Sorry, from this close to that opening, and from that close to that opening. So it still gapped up. It was still moving up. Probably would have been a good play. And then today, definitely, if we would have left the runner, it probably would have been a good one. Let me see what we have. Should I move? Again, we were analyzing the POC line versus the swing. So the XLF probably would have worked. And the last one that we looked at was AT&T, and this was my favorite one. This is what an actual really good play or trade plan looks like after it works. This is Monday. Tuesday we entered our we broke through our entry level, which was this support here at 1750, and from Tuesday on, it was basically, you know, just smooth sailing all the way up. We blew through our price target, and it's still going, and it's probably headed towards this zone right here. So it might still be in play. I'm not going to take it again next week. I have the open play. What I'm saying is I'm not going to take a new play on this one. I'm just going to let it run, and I'm going to adjust the price target, but I'm still in this. I actually did get into this, so I'm going to probably be really, you know, I'll go for a lotto here for try to hit this 1955 area somewhere in there. I'll analyze it some more. That's not a proper analysis, but I just wanted to look over that play. So those are the plays that we took last week, which was the last, well, this ending week, the last week of October. So basically, Bank of America worked. Okay, Oxy worked. That's 2. PFE did not. RIG did not. SAC did not. SMR did not. And XLF and AT&T did. So basically 4 and 4, 50-50. All right, so we did okay, I consider, and I believe our levels, our strategy for drawing levels and for looking at news and catalysts and drivers and whatnot is pretty good. It seems that our tickers are reacting to the levels that we have been drawing, so I'm satisfied with that. Okay, so I'm glad that I'm sharing this strategy with you guys as I am testing it, and I really encourage you to do the same and pick the one that that you like best. One of the things that I am working on is adjusting the fib levels, to be honest, because I have been drawing fib levels. There's that huge gap on AT&T I was talking about, so you know, even at 1955, that's pretty conservative. But basically, the way that I've been drawing fib levels, I'm not exactly happy with, because I've been drawing them on daily and sometimes even hourly. And to be honest, the fib levels work better, like a lot of price patterns and other TA tools. They work better when you have, you know, a good 52-week or at least like a 1 year time window to base off of. So in this case, I would actually use them, but I would definitely use the weekly and use the levels off of that. So look at that. Let me zoom in. Okay, so it looks like it's headed towards the 382 fib, which is one of the strong ones, and it will probably definitely hit some resistance right there. Although it just crossed the SMA, so that's not. Oh, sorry, but this is the 21 SMA. This thing keeps changing on me every time I'm really sorry about this. It's the 50 SMA is the one that I keep track of. Okay, so yeah, there it is. It's going to hit that SMA right there, right around the time when it hits this support, which is pretty close to that 382. So it's probably going to run into quite a bit of resistance there. But if it does break through that resistance, that would be a place where I would actually want to actually add instead of trim my position. If it does get past this level right here, even this support right here, I wouldn't even wait for the 382 fib. Possibly because 382 fib might need some adjusting. But I would definitely enter some more of that position, expecting it to run into the 20s as my price target. So what I would do right now is I would set an alert, although this is not the tool that I use for alerts. I usually use it for crypto alerts, but I would definitely set an alert if it breaks somewhere around, actually right around here. This would be my entry, to be honest, at 1885. So, okay. So we will look at AT&T as the only play that I will probably carry over. I don't have any new ones. If I do come up with new ones, I'll post them on the Discord. But that is what I'm going to be looking at for next week. because there's a lot of economic data, and I probably will want to play some of the ones that worked out, like Oxy and Bank of America. So I'll look at those over the weekend, and if I come up with anything else, I'll post it for you guys. And thanks for reviewing the plays with me. I think we're on a good course. I think our strategy is working well. Our level identification is pretty good, and I encourage you again to do this yourself. And come up with the strategy that works for you, so that you can take your own plays. It really changes the entire perspective, and you can relax so much more once you come up with your own plays, instead of taking alerts from an analyst who did his own job or his own due diligence, and then he's all relaxed over there, not updating, not hand holding every 5 minutes or 10, 15 minutes, and then you're biting your nails on the other side, expecting some sort of alert from him, whether to get in, to get out. So it's definitely a big plus when you're able to make your own analysis and make your own plays, because then you have your own levels, and you know when to get out. Okay, so that's it for today, and for this week, and for this month of October, and I will see you next month. So happy trading.